We note that all three major indexes corrected lower after hitting new record high levels since our last report. In today's report, we would like to address what fundamentally seems to be driving them lower in the current week, the next big test for US stock markets, the troubles of Tesla, and for a rounder view, end the report with a technical analysis of S&P 500 daily chart. Since the start of the week, US stock market bull seems to be hesitant. The release of better than expected financial data revolving around US manufacturing sector tended to highlight the resilience of the US economy. Despite the releases improving the outlook of the US economy, they also underscore the risk of the Fed maintaining high rates for a longer period. Such suspicions were further enhanced by recent statements of Fed policymakers, which tended to push back against market expectations for rate cuts to start in June, or at least express some hesitation for such a scenario to materialize. Should we see more statements of Fed policymakers intensifying market expectations for fewer rate cuts, we may see a more cautious approach being adopted by the market and thus weigh on US stock markets. Given the importance of the Fed's stance as analyzed before and its dual mandate to watch over inflation and promote maximum employment, we also note as the next big test for US stock markets the release of the US employment data for March. Forecasts are for the non-farm payroll figure to drop to 200,000 if compared to February's 275,000 and the unemployment rate to remain unchanged at 3.9%. Should the actual rates and figures meet their respective forecasts, we expect the drop of the NFP figure to disappoint traders somewhat. Yet on the other hand, the figure still remains at relatively healthy levels, and the unemployment rate tends to imply a relative tightness of the US employment market. We do not expect such readings to materially alter the Fed's stance, thus we may see US stock markets being set under pressure. We note that Tesla's share price fell on Tuesday as headlines flooded the net, noting that the company delivered a lower number of vehicles in the first quarter of the year than what was expected. One of the reasons cited for the drop is a slowing demand for Tesla's cars in China, where the company is facing harsh competition from local EV makers. Another reason cited is the factory shutdown in Germany, Tesla's only European plant. The company has been facing labor disputes, while also an arson by activists forced the company to shut down temporarily. The third reason mentioned, which may be larger than Tesla as such and seems to be more systemic for the EV sector as a whole, is the recent preference of consumers for hybrid cars. Overall, we expect that should negative headlines continue to reel in, we may see the company's share price retreating further. We note that on a technical level, S&P 500 has reached a new record high at the 5,290 resistance level before correcting lower. For the time being, we note that the upward movement that has been characterizing the index since the end of October last year seems to be set under doubt. The index's price action is putting the upward trend line supporting it to the test today, while at the same time we note that the RSI indicator is aiming for the reading of 50, which could imply that the market's bullish sentiment may be easing. On the other hand, the 20, 50 and 100 moving averages are all still pointing upwards, implying a possible continuance of the bullish sentiment. Should the bulls maintain control over the index, we may see its price action breaking the 5,290 resistance line, and we set the next possible target for the bulls at the 5,400 resistance level. To abandon our bullish outlook in favor of a sideways motion, we would require the index to clearly break the pre-mentioned upward trend line, thus highlighting the interruption of the upwards movement, yet respect the 5,100 support line and the 5,290 resistance level, thus creating a corridor confining its price action. For a bearish outlook, we would require the index's price action not only to break clearly the pre-mentioned upwards trend line, but also dive below the 5,100 support line, thus paving the way for the 4,975 support base. Thank you for tuning in to our financial report today. We hope you found it useful. Until our next update, from all of us here at IronFX, we wish you solid trading.